let's talk about investing. When you put your money into a company, what's the signal you're following? Today, we're going to look at an index that does something, well, pretty different. It totally ignores how big a company is, and instead, it zeroes in on something way more personal. Who has the most skin in the game?
Yeah, it's a really interesting question, right? We're all so used to hearing about the big guys, the famous indices, but what if there's a totally different signal we should be paying attention to? A signal that, honestly, has been there all along, tied directly to the very people running the companies we invest in.
So what exactly makes this approach so different? Well, to really get it, let's first take a quick look at how things are normally done.
Okay, so most of the big indices you hear about, like the S&P 500, follow a pretty straightforward rule. They're weighted by market capitalization. All that means is the bigger the company's total value, its market cap, the bigger its piece of the pie in that index. It's a system that basically just rewards size.
And that brings us to the big question, doesn't it? Does biggest always mean best? I mean, is a company's sheer size really the best way to predict its future success? Or could there be another indicator out there that's way more powerful, more telling about a company's real potential? Well, that's exactly where this alternative idea comes in, the insider advantage. It's a whole different philosophy that shifts the focus away from a company's size and puts it squarely on the conviction of its leaders. The core idea here is actually pretty simple. The Inside Ownership Index doesn't care about market cap. Instead, it's weighted based on how much of the company is owned by its own leadership. We're talking about the C-suite execs, the board members, the key decision makers who are steering the ship. And the whole mission here is really powerful. It's about giving the everyday investor, you, access to a signal that's usually, well, on the inside. The goal is to let you align your investments with the conviction shown by a company's own top brass. You're essentially betting right alongside the people who know the business inside and out. Okay, so why is this whole skin in the game idea so important? Let's really break down the logic here, because it all boils down to two things: alignment and accountability. See, when insiders have a real financial stake in the company, a few amazing things happen. First, their own interests become perfectly aligned with other shareholders. I mean, they win when you win. It's that simple. Second, it's a huge signal of confidence from the top. They're not just managing the company, they're literally invested in it. And third, it just creates better governance because, hey, their own money is on the line. It's really like a simple cause and effect chain. Step 1, insiders put their own money on the line. Step 2, because of that, their interests are now aligned with making the company as successful as possible. And step 3, that alignment drives decisions that create real long-term value. It's a powerful feedback loop. But at the end of the day, for any of us investing, it all comes down to performance, right? So how does this whole philosophy of insider ownership actually connect to the goal of getting better returns? So this really lays out the fundamental difference in thinking. On one hand, you have traditional indices. They're betting that a company's size, its market value, is the most important signal. But on the other hand, the Inside Ownership Index is making a totally different bet. It believes that the management's conviction, proven by where they put their own money, is what really matters. And look, this isn't just some interesting theory. The whole premise here is that historically, indices weighted this way by insider stakes have shown the potential to deliver superior risk-adjusted returns over time. The goal is to try and capture that potential by focusing on this really unique signal of alignment. So we'll leave you with this to think about. In a world that's so often focused on just how big a company is, maybe, just maybe, the smarter strategy is to bet on the people who have the most to gain or lose, right alongside us, the shareholders. It's definitely a compelling idea and something worth considering.